If you started a business as a sole trader and tax time is now staring you down, this video is going to show you exactly how to prepare your tax return. You see, even though there's no separate company tax return, preparing a tax return as a sole trader still works a little differently to how you were doing it as a regular employee. That's because you need to report your business income and expenses and answer some complex questions. If you've never done this before, I'll show you what that process looks like, how to calculate your profit, and what to do before you lodge. The best way to explain this is through an example. Let's say you started a mobile dog grooming business as a side hustle. You operate under your personal name with an ABN and you travel to clients across your local area. You opened the business in September and work steadily through to June. Over the financial year, you earned $36,000 in income. Your main expenses included fuel and vehicle running costs, grooming tools and equipment, shampoo, cleaning products and towels, mobile FPOS fees, public liability insurance, a phone plan used mainly for business, and a subscription to Xero, which you use to issue invoices, track expenses, reconcile your business transactions through your linked bank account. Xero is actually the software I use personally and the software that I recommend to all my clients. It's an accounting software designed to help sole traders stay organized during the year, so they aren't chasing receipts at tax time. If you use Xero to issue invoices, connect your business bank account, and categorize expenses as you go, you already have most of what you need ready to go when it's time to lodge. They sponsored today's video, so I've left the link down below if you've not already signed up. And I also heard there's a pretty good discount as well. So back to the dog grooming business. Over the year, the total expenses came to around $9,400. That means the business profit is $26,600. That's the figure you'll report in your individual tax return. Let's walk through how you would do that step by step. All right, so here's the step-by-step guide of lodging your sole trader tax return using myTax, which is the ATO government's tax return lodgement system. You access this by obviously logging into your MyGov account and then selecting ATO. So there are two ways to getting into your MyGov. You can always just go onto Google and type in MyGov, login, and then just click on the first line, and then you'll go into here. I've already logged in, so you can see this stuff here. Most of this will be blurred out, so you don't get to see any of my personal information. But once you get to that point, you need to make sure that you've linked your Australian Taxation Office account with MyGov. If you haven't done that, then you must be living in a rock, because you've got a sole trader tax return, so you need to get that done as soon as possible. So link it so you can actually see your tax information while doing your while you have that side hustle or sole trader business. There is another way to get in there. You can also type in myTax ATO, and then it will take you to the first link, which is lodge your tax return online with myTax. Click on here, you can scroll, it also gives you some steps on what you need to do. You can read all that. But if you want to get started, start your tax return with myTax. Once you click on that, it will also take you to MyGov and take you to the same spot. This one takes you directly to the Australian Taxation Office already. So as long as you've logged in. And you've integrated and set up your account with MyGov and Australian Taxation Office. Okay, so if you've got your sole trader tax return registered, which is your Australian business number, and you've got a tax return that you haven't done yet, remember, as a sole trader, you only need to lodge one tax return. And that tax return, whether you've made wages or whether you made your sole trader income or combined, you need to lodge it under that tax return. You don't go and have a separate tax return to do. So if you're still waiting for your wages to be updated under single touch payroll by your employer, or you're still waiting for other income that you haven't received yet, or you haven't got the reports yet, then you still need to wait for that before you can lodge your sole trader tax return, because everything is combined together when it comes to sole traders. Your wages, your salaries, your dividends, your capital gains if you've sold any property or shares, your investment income if you've got any other investment income, as well as your sole trader income, which is your business. You need to wait for all that information collated and ready for you to be lodging this. Okay, so just a quick guideline. Due dates is the 31st of October if you're doing it yourself. Once you lodge it, most refunds are issued within 2 to 4 weeks. But if you've got sole trader income, you may not get a refund because your income that you've earned through your sole trader income has not been taxed, or may not have been taxed enough. So generally, people that have side hustles end up paying taxes and they freak out. So I just want to let you guys know that you need to ensure that you get these done by the 31st of October, and that you sometimes will have to pay taxes as a result of that. So get ready to pay the taxes as well. Cool. All right. So logged on, and you'll see these two line items here. You may see more BAS business activity statements. In this case here, I've also got an ABN. I'm also used to be a sole trader, so I have to lodge business activity statements. So make sure all your business activity statements are done. I've got a separate video to show people how to do business activity statements, so just follow that. But generally, you got to get this all lodged up to date before you prepare your tax return for June 2025. After July 2025, if you got BASs outstanding from then onwards, it's not really that important because for 2025, because you're doing it for the 2025 financial year. 2025 financial year is the 1st of July 2024 all the way to the 30th of June. So you just need to make sure all your BASs are lodged up to date up to the June 2025. And then for 2025 onwards, for July 2025 onwards, the BASs are not that important for this financial year. Okay, so my due date is the 31st of March. That's usually extended for me because I'm a tax agent, and this is usually done by a tax agent. But in your cases, it's most likely due on the 31st of October. So anyway, make sure your information is correct. You might need to click on my profile. But yeah, press prepare and press the resume button. Then there's pre-filled data. So data is already being put in. A lot of the data are just the wages that I've earned and any other income I've earned, like bank interest and dividends. Okay, so I've already updated a few things. So I'm going to actually go back down to contact details. First thing you need to do is just update all this information. All of this information is going to be blurred out. But basically, you need to update your phone, contact details, your address, and just make sure that that's all correct. Scroll down to the bottom, and if that's all correct, press next. If it isn't correct, update it. Okay, now, bank details. So financial institution, don't know why they make it so confusing. I don't know why they don't just say bank details, but financial institution means your bank details. So you just put in your bank details. If you're going to get a refund, most likely the money will go into this bank account. They don't send checks anymore. They actually send it directly to your bank account. Just because you put your bank account details doesn't mean you're getting a refund. I just want to point that out. They just ask for it just in case you get a refund. Okay, once you go next, you now need to update some information about your situation for this current year. So were you an Australian resident for tax purposes from 1st of July 2024 to 30th of June 2025? If you live in Australia for more than 183 days, most likely you're an Australian resident for tax purposes. Just some people get confused if you're not a citizen of Australia. It's two different things. Citizenship versus tax residency or Australian resident for tax purposes is two different things. Don't confuse the two together. So if you lived in Australia for 183 days and you have a visa to be able to work and earn income, most likely, and you have a tax file number, most likely you're Australian resident for tax purposes for that financial year. So usual answer is yes. There are some cases where you'll no because you don't live in Australia anymore for that period that you're lodging your tax return, and the income that you're earning, you just need to pay taxes for it. Australian taxes, and so therefore you need to lodge a tax return. But most cases it will be a yes if you're a sole trader working in the business. So basically, if you're an Australian resident for tax purposes, which is most likely a yes, if you're a freelancer or a sole trader in Australia, then the answer is usually yes, because it's very hard to run a business in Australia and not be based in Australia. So you're most likely a tax resident. Did you have a spouse between this period? Yes or no? That's the answer. Just answer that. And then this section here at the bottom, some of this gets pre-filled already based on what the ATON knows about you already. So if you received any other income, from salaries and wages or the Australian government, you have to tick that part up. So in my case, I've just received salary, wages, and allowances. So this is already automatically ticked because my employer has reported that income. So there is a part where it says something about the proposed 1,000 instant tax deduction. It's actually for next year, so they're just giving you a note that you don't need to think about that $1,000 straight away this year. If you're doing it for 2025, then ignore the $1,000 instant tax deduction. You don't put anything in this case. I also have interest income, so I've selected that button. Some people will usually have dividends and rental income. I don't have a video. This video is not about rental income, so we're not selecting that. And also capital gains. It's not, so we're not going to select that. The main thing we're focused on is this, which is you're a sole trader, or you had a side hustle that was earning an income on the side, and you haven't paid taxes for it, and you also possibly had wages in your personal name. So you select that. My thought is, there's actually two sections, like personal services income and business income or loss. So people get confused about personal services income quite a lot. Personal services income, you need to select if you were earning income based on your hourly rate, or you're selling an expertise or service that was like regarding your personal hours that you're providing out there. Generally, if you're a sole trader, you don't need to worry too much about personal services income. I generally just put it in the business income or loss section. But if you want to be detailed and you are selling an expertise, your labor, or hourly rate, you can select this button here. In this example, because it's a dog grooming business, we will not be selecting that personal services income, because they're not providing an hourly rate. They're actually just charging per dog or per size of the job. So it's not really hourly rate that they're doing. They bring their own equipment, and it's not personal services income in their eyes. So I also have some business deductions that I want to claim, and work-related deductions that I've put in already. This is from last year, so I've selected those as well. If I had any losses that I incurred in previous years, I would also select this button here just to put the losses in, so I can claim the losses from previous years. In this case, in this sole trader business, I don't have that. It was just newly set up. I just set up this business and I made some profits, and I just want to put that income into my business and pay the taxes that's required. All right, now that's it for my section. For this section, and the next part is to select next. There is some prompts. They do ask about, are you claiming any tax offsets and adjustments? Tax offsets and adjustments are usually if you're a senior or a pensioner and you get to claim some sort of offset, or if you work in like if you were a veteran or something like that, you'll be able to do that. If you're a small business, which like in this business there is, it's a small business, you can click that amount, that section here, because you're running a small business as a sole trader. So you can select that amount here. There is a small income tax offset that you can get. So just to quickly show you guys, offset. The small business tax offset is basically you can get an offset for up to $1,000 each year. So make sure you select that amount. You get that offset. Usually it's about a 16 cents all the way up to $1,000. 16%, sorry, all the way up to $1,000. Yep, cool. All right. So going back to here, you selected that amount. All right. So next. So obviously, my parts will be blurred out. My occupation and my job and how much I get paid. But in your section, if you work for someone and if you're on PAYG, your income and your occupation should already show up, as well as the taxes that you've paid up to date. My one is shown here under income and tax withholding. So just double check if it's correct. If it hasn't pre-filled, then you need to call your boss or your employer and tell them to make sure that this gets updated. Your single touch payroll needs to be updated as soon as possible. So double check it. If it's correct, then that's great. Move forward. And then check your interest income, check your dividend income, Okay, so once you've done the salary and interest, you need to go and fill out and check the sole trader partnership income. I've got the spreadsheet here. Um, and this spreadsheet has actually been created over the whole year. So I've added all my expenses up and also added up more my income. As you can see, the profit and loss of the business is 26,600. But then there's also all these expenses that we've incurred, 9,400, and the income of 36K. So that minus this works out to be my profit. There is depreciation here, which is highlighted in yellow. This hasn't been updated. The reason being is because I actually have a link for you guys to be able to calculate this. It's actually a bit complicated to calculate. So, and it also depends if your side hustle or your business actually has purchased equipment that or a capital asset that you use for your business that lasts for more than a year. So examples of like those capital expenses or equipment that you've purchased are like a car, a forklift, a laptop or a computer, or even like furniture that lasts for more than 5 years. If that's the case, then you're not allowed to claim those expenses all up front. So you need to put it under depreciation. So there is a video link that we're going to send to you that the ATO provides on how to update this. They have a tool to use to be able to calculate your depreciation. And depending on how you fill out the information, it spits out your depreciation for you. I'm just going to assume in this case here that the depreciation is 0 because my side hustle or the business side hustle didn't need any equipment and didn't need any like capital allowances. So therefore depreciation is 0 for this case. But just follow this tool and then just check if you have any. If you do have any and you get that figure for 2025, you just need to slot it here. It just reduces your profit, increases your expense, and just make sure you update the P&L. You would generally have this P&L in Xero or your accounting software. Export that information out and save it and use this information to slot into your tax return. So now going back to the tax return, next step is click on add and edit. So this is the part where there's a bit of information you need to fill out. Did you receive personal services income? So if you're not sure on what personal services income is, select this and click on here and just have a read of what personal services income is. But basically, personal services income is income that you produce that you're selling a skill or effort. Or so, for example, you're selling an hourly rate or you're providing labor services, then most likely the answer is going to be a yes for PSI. If it isn't, in this case, it's dog grooming and you're just charging per dog, it really isn't actually personal services income in this case here. So the answer is no. Most most sole trader businesses would be like a no. And even if you select yes, it shouldn't really impact too much of your situation. You just have to go follow the prompts. Did you sell your services and have you satisfied the results test? There's this formula here that you need to go into working out if PSI rules apply. So you click on this and then you just go through the different tests. It's actually quite confusing, and in honest opinion, as a sole trader and small business, most likely the answer is if you're not selling an hourly rate, if you're not selling a skill or expertise, and you're just charging per job, then most likely the answer is a no. Okay. I'm not saying that that's 100% true. There are cases where the answer was a no. It was a yes. You weren't selling your hourly rate, and still it's a yes. But most cases it will be a no. Okay. Anyway, dog grooming. I'm gonna type in grooming, and it's not gonna show up. So what do you do then? It's actually a bit confusing for people to. This is the part where people get stuck. They can't find the activity. So I have a trick towards this, and that trick is ChatGPT. So I just go dog grooming business. Let me just put this on here and go dog grooming. What is the ANZIC code for dog grooming business in Australia? Yep. So, and then it will tell you which one to put in. So, ChatGPT, you should always check it just to be sure. But pet grooming seems like it falls under this one. So, you can just type in this name here, other personal services, and click here, and it will come up here. Yeah, that's the trick I usually do. Use ChatGPT to give me the answer. Okay, number of business activities. Okay, how many businesses do you have in this ABN that you have? So in this case, it's just one side hustle, which is the dog grooming business. But if you have dog grooming business and you also sell products on eBay or Shopify, or if you do personal training, then you'll have to say one or two, for example. But in this case here, it's just one, and my business has commenced. It started this financial year, so I'll click on number 2 for commence business. If it's been ongoing and you lodge a tax return and a sole trader tax return for your business already, then it should be 3, continuing the business. If your business ceased this year, then you select this amount, but you still put the P&L and all that stuff in. So it just depends on you. My one is the business just started. All right, name of the business. If you have a name for the business, then you just put the business name. In this case here, the business name is just Davie Mach. I don't really have a business name, but you could have Davie's Pet Grooming, for example. But you have to make sure that you have registered that business name and it's actually registered with the ABR, Australian Business Registry. Then you put in your ABN. So I'm just going to put in a random number for the time being. So, and usually, you can grab that number from Australian Business Registry, so you can actually search your business number here. If you're not sure what it is, you can just search your name, or search name of the business, and it will come up. So I'm gonna blur this, but yeah, this is what I'm gonna copy over, and I'll put it into the tax return here. All right, cool. So that part's filled out. So you've got all the business details here. That's all been filled out. Click the save button if so. And then it will take you to the business income statements and payment summaries. So if you're running a business and you're getting paid via another business through their payment summaries, you'll put in their details here. You would get like some sort of payment summary or some sort of like statement from them if that's been happened. And also that the tax withheld from them. If there's no tax withholding and they're paying directly to your bank account through an invoice and they're not withholding taxes, you just need to skip this step. So ignore this part here. This part's not needed. So you delete that and you just need to put in your income that you've earned. Okay, now, what's the difference between primary production and non-primary production? Primary production is basically plant, animal cultivation, fishing, pearling, tree farming, and felling, like tree falling or something, tree felling. So these things here, most of the cases, if you're a sole trader and you're doing something side hustle, you're most likely not a primary producer. They just want to know that if the income is primary producing or non-primary producing. But in your cases, most likely, it'll be non-primary production income. So especially for this dog grooming business. You've got accessible government industry payments. So if you get any government grants, if you get paid like a apprentice income, or you get any reimbursements from the government, sponsorships and all that stuff like that, you will put that income here. If you receive any other business income, like invoicing income, like dog grooming business income, you'll put that in. And as per the profit and loss, which is here, it says that $36,000 is the income that we've earned. So we're going to put $36,000 in here. Okay, round it up if it needs to be rounded up. Now, you've got opening stock, purchases, closing stock. If you're running a sole trader business, it's not necessarily needed to like track your opening stock and closing stock that often. So you can just put in the total purchases that you've had. Total purchases is basically things that you need to spend that is materials or related to running a business in terms of like cost of goods and services, or any purchases that you need to buy to package up your sale. Because you're doing dog grooming, which is more of a service-based business income, there is no like actual materials that you need to buy apart from these things here. So we won't put that in purchases and other costs. We will leave that blank. So you don't need to put in information if you don't have that information. The main thing is the cost of sales for this in this business is pretty much there is no cost of sales, so we're not going to put that in. But if you're like, selling e-commerce, then you'll probably put in your purchases and your items that you've purchased to resell in under purchases. Okay. No need to track your opening stock and closing stock if you're running a small business. When you're a bigger business, then you'll probably have to track your opening stock and closing stock. And that's where getting an accountant might be a good idea. But in this case here, you can leave those out, especially for this dog grooming business. Foreign resident withholding expenses, that's usually a zero. If I paid for a contractor, if I had someone else working in my business and I'm paying them through their ABN and they also have invoices, then I'll put that through here. But in this case here, these expenses, there is no contractor. So I can leave that as blank as well and put that as zero. Superannuation, if I paid superannuation to myself or to my employees, I'll put that in. But in this case, that's zero. Bad debts, zero. Lease expenses, is there any rent? Lease expenses is rent. So it says you can highlight this question mark to have better understanding. If you don't get it, ask ChatGPT as well. Lease expenses is actually for more equipment purchases. So in this case here, any equipment that you're leasing right now, rent is actually at the bottom. So there's no rent in that. So I'm going to quicken up this pace. There's no interest as well. There's no actual credit card or no loans that you're taking. So that's a zero. That's a zero as well. Depreciation, as I mentioned, you can go through that that link I'm going to show you guys. Where is that link? Here it is, that you can use. So this is the link that you can use that explains how to use the ATO's depreciation schedule to work out what depreciation should be for any of the equipments that you have spent quite a lot of money on and that lasts for more than 1 year, that you can claim the life the expenses for that equipment over the life cycle of that equipment. So you don't claim it all at once, but you claim a portion every year. Okay, so in this case here, I don't have any, so I'm putting as zero. Then there's the part where you've got motor vehicle here. So I'm going to bring this back. There is motor vehicle here, which is 2,800, and it's logbook method. So you put 2,800 here, and then you select the logbook method. We have separate videos regarding motor vehicle expenses and how to claim it. So there is logbook and cents per kilometer. If you want to go the easy route, you do cents per kilometer. If you want to go the more complicated route but get a claim more, most of the time it's logbook method. But read up on it, how it works, and you got to keep a logbook and then work out all the actual expenses and apply the percentage against the total expenses that you've claimed, that you're planning to claim. Okay, repairs, maintenance. In this case, there's no really repairs, maintenance, so you put that as zero as well. So right now, total expenses that we've put in is 2,800. That's okay, because that's all what the ATO wants to know. So you just do the total expenses that you've got minus 2,800, plus 2,800 to work out what the difference is. And then the difference is 6,600. Then you can put all other expenses as 6,600. Then your total expenses matches this one here. And you can delete this after. Okay, now total expenses 9,400. So you should have the profit as 26,600. So let's double check that. Section 40 deduction. So if you quickly do a quick Google search of that, you'll see that section 40 is like, setup costs. If there's any extra setup costs that you have paid, that you can put through here. But there is none. So in this case, you can put zero. Business deduction project pool. This is related to, depreciation. If you want to claim depreciation on capital expenditure, usually you would put it through here in the depreciation section above. Where was it? I can't see it here. So if you don't, you either use that method, this method here, or you use this method here. It will just depend on how you claim it when you use that article and that calculator to calculate depreciation. Okay, so I'll put that as zero for the time being. Land care, operations, and business deductions, most cases it will be zero. So I'm just going to skip through it. Income reconciliation adjustments and expense reconciliation and adjustments. As a sole trader, you kind of you don't need to put these in. I recommend just making the adjustments based on the total income. It gets quite confusing. So you just rather if you just show what the income you can actually claim, can put, what you've actually received, and the expenses that you can actually claim. Just put those in. You don't need to make adjustments. This is more for accountants where they want to make adjustments and reconcile the taxable income to the profit of the business. But in your case, because you're doing your own taxes, it's basically the same thing for you guys. So what happens next? Profit becomes $26,000. We just check it, 26,600, and it is. If it was a loss, you'll have to defer some of your income. But in this case, you're not deferring your own income. You're not bringing forward any previous expenses, that losses that you made. So basically, all of that is zero, basically, in this second section. 0, 0, 0. And then here, this is the part where you actually need to work out what the profit is and put that profit in where it came from. So net non-primary production income or loss from a business of investing. Did it come from you investing? No. In this case here, it's a side hustle. You're running a business. Did it come from rental property? No, it did not come from rental property. So where did the income come from? It came from running a business. So therefore you put 26,600 here. Yeah. If you got this income from investing or you got this income from business, then you put it in here. But most of the cases, you will slot it in here and you put the rest as 0. Okay, so save. That's what you've done. And what happens now is they're now asking for more information. Small business entity simplified depreciation. This is where if you opt out of using the normal depreciation rules and you use the small business simplified depreciation rules, which is, if you click here, which are these rules here, and you just need to read up on it, it basically instant asset write-off. You actually skip the putting in the depreciation money amount here. So see how we've skipped it and put it as 0. The reason why I don't fill this out and generally is because for most small businesses, use the small business depreciation rules. Basically, it means that if you purchase any asset that is over or under $20,000, we get to claim the whole thing up front. So we don't put the depreciation expense in this section here, where it was here. We always leave this as 0. And then we go down and to the section where they go small business entity simplified depreciation. And when we claim the depreciation here instead. So this is where we put the depreciation. So we say if you purchase an asset for $5,000 and you want to claim the whole thing up front, using the small business depreciation rules, which is anything under 20K you can write off, or this rule here, where if it's over 20K, you want to use the small business pool just to claim 15% upfront for the first year and then 30% ongoing for the next year. Then you just need to put the amount that you've claimed under here and click the save button. Okay, but in this case here, it's 0 as well. So I'm just going to leave these as 0. Trade debtors, there's no trade debtors. Trade creditors, there's no trade creditors because I'm a small business. It's a side hustle. We don't have people that owe us money and people that we owe money. So we don't want to put those information in. As a sole trader, it just depends on you if you want to be very detailed. You could put this information and grab this information from your accounting software, but not necessarily needed to do that. All right, so payments to associated persons. If your sole trader business pays your wife, then you might, or your partner, you might need to put that information in here. But most of the cases, it's 0. And total salary wages, I don't pay any employees, and I put that as 0. I don't know why it won't let me, so you just leave it as blank then. All right, so I'm not gonna bother putting any more numbers in here because these are all like I said, not really required. We don't have any intangible assets. There's not any assets that we first deducted. So as a result, not really required. Trading stock election, we don't have any. So we're going to put that as no. Don't need to even put it in the time. You can select that save. And then that's it. That's how you fill out the P&L. And then you can press the save button. Okay, if there's any errors, it will pop up. But basically, this is how to fill it all out. We filled out, just to clarify, the salary and wages. We filled out the pre-filled the income as well. We put in tax deductions, as I mentioned, for the work. And then we also then put in the income that the business has made, which is 26,600. So that we need to double check that this here matches this amount here, plus or more minus depreciation expenses if you've come up with the depreciation expense through the calculator from the ATO. Once that's all put in, you need to double check your spouse information. And as I mentioned before, spouse income, you just need to put an estimate. So you can just click on this, go inside, put in their details. You just need to put in the spouse's income. So we can just, like I said, it's just an estimate, but try to get as accurate as possible because that's what the ATO uses to base it on your Medicare levy and Medicare levy surcharge. So if you got to work out and ask your partner how much income that they've earned, and then if they've given you an amount that's pretty accurate, then you just put that amount there. The rest of these are not really needed to fill out. Most of these are usually a zero or not applicable. This one here, you need to put in. So if you know, it should be able to get it from their payroll summary or from their ATO single touch payroll information as well. If they are not sure, then just leave it blank for the time being. If it needs to be fixed later, it will be automatically fixed. The ATO will know this information anyway. Okay, and check if there's any other deductions that you need to put in. So if you've got work-related deductions for your PAYG job or for the job that you're working on or the dividends that you make, you need to put your deductions here. So you click on add here, and then you'll just put in what type of expenses that you'll put that is related to your work that you're working for. Not your job, not your business, but not the dog grooming business or whatever business you run, but for car related, travel expenses, self-education or work related, specifically to do with your PAYG income or any of your interest or dividend income. And then obviously donations is also put in here. I'm going to put this all blank because in my section, I have claimed most of those expenses already. Okay, so obviously my spouse is blurred out. If you have a spouse, put in your spouse's taxable income as well. Cool thing about this is that a lot of people confuse that you need to put in the spouse's taxable income that's shown on their tax return. That's actually a myth. You only really need to put an estimated amount of what your spouse's income is. It doesn't have to be exact, but an estimated income is enough from what the ATO has advised us. In terms of the small business income tax offset, just need to put in the net income that you've made. So this is the part where I forgot to mention, but you need to make sure you've done your profit and loss. And so our sponsor Xero would have helped you prepare a profit and loss. So as long as you have all your bookkeeping, all your income, and all your expenses in accounting software, you can actually spit out the profit and loss. Xero can do that for you, but technically you can do that outside of Xero using like a spreadsheet as well. So this business had income of $36,000 and it had other expenses like fuel, grooming, tools and equipment, shampoo, cleaning products, FPOS fees, as well as insurances and phone and miscellaneous expenses, and add up to $9,400. Depreciation, we have highlighted and left this blank. There is actually a tool with the ATO that shows you how to do this, how to calculate your depreciation. It's better that you just follow the tool, and this is the link here. So you can just Google how to use depreciation and capital allowance tool, ATO, and you can find this video on how that is worked out and how it's claimed with the system. So I'll recommend looking at this if you have any depreciable assets. So a depreciable asset is like an equipment or plant equipment that you use for the business that you hold for more than 1 year that you should be claiming over the lifetime value of the asset. So for example, you've purchased a car for the business or a van, a forklift, or computers, laptops, something that you use for more than a year, then you'll have to depreciate it over its lifetime rather than claim it all at once, because you can't put $50,000 a car purchase here because you're going to just put the whole profit and loss into a nil. Basically, it'll go into nil and that won't make any sense. Make sure you follow how to use depreciation capital allowance tools if you have any depreciation to claim, and that will then increase the expenses that you have, and then it will reduce your net profit. Okay, so I won't go into detail of this because this business doesn't have that. But if you do have it, you just need to use the tool to work out what the depreciation is. It'll reduce your total expenses and then it'll reduce your net profit. Okay. All right. So just to fill this out, you need to put in the small business income tax offset. This will just help reduce the taxes that you need to pay. I generally make sure that you put that in so you don't forget about it, because if you do forget about it, you will lose that tax deduction or tax offset. So this small business is actually from sole trading, so you put that as 26,600. It's not from a partnership. It's not from a trust. You don't operate under a trust or a partnership, so you select those as zeros. If you're lodging a sole trader tax return, this is where the money goes. This is where the profit goes. So save and continue. And then that offset account, offset part is filled out. The next step is then going into income tests. So this section here, most of the time, you just need to put in your child support you pay and the number of dependent children. If it's all zero, then just keep it as zero. If you have kids, put in 1. Most cases, these you don't need to pay child support, so you can just put in how many of the children that are dependent children that live at your place. Press save and continue, and then they use this, just so you're aware, to calculate the Medicare levy if you have Medicare levy and the surcharges. Okay, so now the section then is your Medicare and private health insurance. So you click on add, and then you just need to put in your private health insurance details, and so they can exclude Medicare levy surcharge. I just want to quickly explain that Medicare levy surcharge and Medicare levy are two different things. So Medicare levy surcharge is charged on you if your income is over the threshold. So Medicare levy surcharge threshold, I think it's usually about $90,000. Let me just quickly show you guys. Oh no, it's actually gone up. Sorry. So single threshold is now $101,000. So it's gone up. So if you're single and if you earn under $101,000, you don't need to pay Medicare levy surcharge. And to avoid Medicare levy surcharge, it's like your requirement is actually to get a private health insurance hospital cover, not extras, private health insurance hospital cover for the whole financial year, and then you don't need to pay the surcharge. The surcharge is basically 1 to 1.5% depending on your income that you earn. And if you are part of a family, then your threshold is higher. So they look at your total income that you've earned in your tax return. So this is really important to know this to work out if you need to get private health insurance hospital cover for you and your family if you have it. And the only thing you need to do, usually this is pre-filled if you have it. So if it's pre-filled already, and that means you have it. And if you don't have it, and your income is above these thresholds, depending on your family situation or if you're single, then you're actually going to be up for an extra amount of levy that you need to pay with your tax return. So it's not a good thing if you're above the threshold and you don't have the insurance. Okay, so just close these off. Yep, the next step is check, save and continue. Check it all. Check if it's correct. And then the last step is actually putting your other income that you need to put in. All right, so that's all filled out. Income test is filled out. Medicare levy and private health insurance is done. And you press the calculate button. So just review everything, double check if everything's correct, double check the address, double check the bank details, double check the income, the deductions, and the other information that you need to put in. And then you press the calculate button. So based on the income, the income I've made and the taxes, the total taxable income that I've made, there is a tax of $63,000. Because I've already paid some taxes, $55,000, there is an estimated amount of payable of $11,000 that I need to pay. Okay, firstly, I just want to point out again that this is not my real income, and this is not the real tax that I need to pay. This is just, fake amount that I've put in just for argument's sake, but this is how the taxes work. If you're happy with everything, all you need to do is click this button here, check everything, review it, and then press the lodge button, and the lodgement will happen. Sometimes there will be a tax payable, sometimes there will be a tax refund. If you've paid too much taxes during the year and you need to get a refund, it will calculate all that. It will also calculate if you need to pay some money from your HEX or help debt. So if you had help debt that you needed to pay and you have been paying, your help debt that you've paid throughout throughout your pay slips will show up here as a credit, and the extra help liabilities that you need to pay will show up somewhere here as well. So that's if you have any help debt. And then it will be like your help liabilities that you need to pay minus what you've already paid up to date, and then it will be tax refund or tax payable. So that's how help gets added to this as well, help debt. In this case, I don't have any, so as a result, it won't show up. But the next thing is press the lodge button, and that's voila, your tax return has been done for the financial year. This was a simple example, but it gives you the basic idea. If your business setup is more complex, or if you have multiple income streams, it might be worth speaking to an accountant to make sure everything is reported correctly. The key is keeping good records during the year, understanding what counts as a business expense, and reporting your income and expenses accurately. If you're also registered for GST, you need to submit business activity statements. I've done a separate video explaining exactly how to do that. And if you want to make things easier next year, setting up a software like Xero can make the entire process far less stressful. Thanks for watching, and see you guys next time.